When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Sean Hackett. Sean Hackett is with Hackett Financial out of Boca Raton, Florida, and he's nice enough to come on and talk about what's happening in the marketplace. Sean, how you doing this morning?
Doing pretty good. Looking forward to another fun-filled day of excitement.
That's what I'm looking forward to. Speaking of excitement, you might hear in the background they're doing some construction upstairs, so it's not my stomach or anything like that making any crazy noises. So just bear with us here, folks. So, all right, Sean, let's start off here. Let's talk about oil for a little bit. Oil was a little engine that couldn't, and the Biden administration decided they were going to bring out the strategic reserves and promised to buy everything back when they got in the 70s. Not only did it get to the 70s, got to the low 60s 3 or 4 times. Nothing happened, and now we're looking at oil almost to $100. I guess, Sean, taking a look at the oil marketplace right now, that's going to be pretty expensive to start refilling that strategic reserve now.
It's assuming we want to.
That's true. Good point. Never. Yeah.
If one believes in the whole world's going to be electric cars and when there's no demand for gasoline, then we won't need any. In fact, one would argue that what Biden did was sell a good portion of the reserve at the best prices we're ever going to see the rest of our lifetime, if you believe in that narrative. So maybe those that have made those decisions, maybe they don't think they ever want to buy it back. See, the problem is, though, they had my understanding is they had sort of made an agreement with Saudi Arabia that when oil got under 70, that we would buy oil back for the reserve, that we would support the oil market, and we didn't do it. And I think, Saudi Arabia got really upset that we weren't supporting the market. And, the way it was going, we were heading into the 60s and maybe even the 50s, the way it was going. And then they decided they were going to pull production, and they did. And through pulling production and from, demand being what it is, all of a sudden the market's tightened up. And remember, we don't have a whole lot of strategic petroleum reserve to sell anymore, and we're not selling it that much anymore. So most of the excess crude that came on the market was selling of the strategic petroleum reserve, which if we don't have, that means we're really running at a tight market to a deficit. So then you pull back production, we're really a deficit. So I think it was Saudi Arabia's way of saying, we didn't really appreciate that, and we can make oil $100 and make life a little difficult for you guys. And it appears to me that's what they've done. Now, what happens after this? Will OPEC decide, the prices are high enough where they gotta bring the money home? Probably. I don't really think that it's in their best interest to get the market much over 100, because over 100 you start to deal with demand destruction again, hurting economies again at a time where we have high interest rates and things are fragile. I'm not sure they want to kill the golden goose. At the same time, I think they wanted to send a message to Biden. They didn't appreciate that. We're still in control of the oil market. And by the way, if for some reason we were to get back down, again, maybe you should rethink not supporting the oil market by buying strategic petroleum reserves. That's my best guess. Not that I'm an oil guy or a geopolitical expert, but that's my best guess to what's going on here. So
Well, that seems like it makes a little bit of sense when you think about it. I mean, they had 3 opportunities to do that, and they did nothing. I mean, they could have made like history. Like people would have wrote papers about that, and in some business school someplace that had been talking about the trade that the U.S. government made, because it would have been an epic trade. I mean, it would have been, the single best trade in all of trading history. I think would have been there.
of that kind of size, yeah, it would have been an incredible trade, but they didn't pull the trigger, and now who knows? Now all of a sudden, something could happen. There could be more geopolitical issues. The economy could rebound. The Fed could, a lot of things could happen. Then all of a sudden, oil's, back up to where it was.
Yeah, exactly. All right. We kind of talked a little bit about this before we started recording it, because I'm just curious as I hear the amount of news that comes out of China right now, and especially in a place where so much news is controlled. As you look at various news outlets and what you can see, you can't really necessarily trust what comes out of China, but if you kind of read between the lines a little bit and see what's happening, there's some significant economic issues going on in China right now. So if you look at the overarching issues with China, they've had 2 or 3 2008 style real estate collapses over the last 2 or 3 years. And watching that happen, you've had you have a whole demographic now of young people coming in that don't necessarily want to work in the manufacturing space as much as they want to work in the computer space, the computer engineering space, software engineering space, working on those kind of things. So right now, China's in a bit of a pickle when you start looking at their economy. Some of the parallels that I was thinking about, and it was to Russia in 1989 and what you saw happening there. And I guess, Sean, I'd like your opinion on, is there a possibility that we could wake up one day and China just be a complete hole in the ground someplace?
It's certainly always possible when you have a command economy, more of a socialistic economy, run by essentially an authoritarian. There's really no one that can tell Xi no. He'll do whatever he wants to do, and maybe he's right, maybe he's wrong.
Their defense minister must have told him no somewhere along the way.
So usually that's a dangerous position to be in, and their demographics are so unfavorable that unless they were to allow massive immigration into the country, which does not seem like they're doing anytime soon, the only way that they can keep themselves together is they have to massively create increased wealth for the people that remain in their prime consumption years, which are declining. So Japan went through this. Japan's population cut in half, and their economy has stayed flat because they've been able to increase the wealth per citizen so much that even though the numbers are in half, the economic activity is the same. And that's like a fantastic scenario. Like, Japan, that's a great outcome for Japan, not to have a declining economy with such terrible demographics. So the real question in the long run, meaning like 10 to 20 years, can China do that? Are they able to create that wealth for the 300 to 500 million people that will remain, in the productive phase enough to offset a halving of their population? I don't really know if they will or won't, but that's the big challenge. And what they're going through now is some of those early growing pains of what happens when your demographics start to become lopsided, where you have too many old people consuming less, needing more, and not enough young people to come up underneath to help support the system. So I don't think we're eminently there. I think, it will take some time if we're going to get there. But certainly if China does not figure out a way to turn this around and provide a better framework of how they're going to deal with this demographic issue, then what's going on now, you'll see more often and it will accelerate. So I've been saying in my writings and in my speeches that we need to be looking elsewhere for demand for agriculture and for commodities. I think China's sun is set in terms of them being the go-to person for commodity demand. They're still there. They still have needs, but I think we need to be looking at places like India, for maybe new places that are up and coming, that are going to take the baton and really become the driver for commodity growth, energy growth, food growth, and demand. So to me, I'm not really looking for anything exciting in the long term from China, other than just some up, back and forth oscillation depending upon their economy, depending on their production, and the geopolitics of the situation. So I think anyone looking for China to be the driver for commodities forward in terms of increased demand and higher prices, I don't think they're the engine anymore. They had a 20-year run, but they simply cannot do it anymore demographically, and they just need to figure out a way to remain viable in the long run. So,
Okay. So demographically, as you talk about looking around the world, most of the world is in a spot where, with the exception of like 5 countries, U.S. being one, most of most of South America being one of those. I mean, even Mexico to some extent is having some demographic issues. But you start looking like where's that next place at? Because so much of the world is at a point now where their birth rates aren't replacing the population they have. So I guess as you look out across the world right now, Sean, where do you see that next quote unquote China to be?
well, the only country that has the population and with the good demographics to really to provide the kind of demand, sizable demand, to replace what China has been, that I can see is India.
India.
I
Yeah.
don't really see anybody else. I mean, right now India is pushing 3.5 to 3.7 trillion GDP. When China crossed that level is when their demand for commodities went through the roof. When we look at Japan, when they were really big buyers of commodities in the late 60s and the 1970s, it's when they crossed about 3.5 trillion GDP that their demand for commodities went through the roof. And now India is now crossing that same threshold, and we're starting to see their demand in many of the markets starting to increase to the point where India is feeling the need to restrict exports. What's interesting is, one of the main reasons that India says the reason that they're halting exports is because they have very, very high domestic prices for everything. Meaning everything is just super high, and prices are high, and inflation is high. Well, why is that? Because the demand domestically for these items is so strong, and the supplies that are available are apparently are not enough, based upon what they had been doing with exports. So they've decided to keep the supplies home and start working at knocking those prices down. But I think we're reaching a point where India is found itself in a positive space economically, but realizing that being the exporter to the world of key agricultural items may no longer be in their best interest, and they're starting to figure that maybe keeping all this supply at home and working on ways to maybe bring some extra supplies in is the better way to go to manage the long-term growth trajectory. Because if they're going from 3.5 trillion to 10 trillion or 15 trillion over the next 10 to 15 years, Casey, I don't see how they can support that by being a major exporter of these things. I don't see how that's going to happen. And so that, to me, is the biggest story of this year, is a shifting of India away from an exporter to potentially an importer, and potentially a really, really big importer, especially if weather problems arise and they have short crops like it looks like they might have this year. So that's, to me, is the bright spot. Their demographics are phenomenal. Um, their politics are a little chaotic in India, but at least it has there's some semblance of um, of a free economy, of a capitalistic economy there. They do vote, and I mean, it's not a command economy like it is in Russia or like it is in China. There is a rule by many. Although Modi is a powerful leader, and he can oftentimes sway people to his thinking, but he's definitely not an authoritarian, and definitely can't. The way their system is structured, he's not able to just do whatever he wants, however he wants. He still has to have a democratic, majority in his favor to get things done. So at least they have a system that has the ability to self-correct, and have stupid people get pushed out and have smart people come back in to keep things alive, instead of somebody saying, it's my way, if you don't agree with me, I'm getting rid of you. That's the classic authoritarian model. So it looks to me like to be a really, really up and comer, and probably the biggest economic miracle that's coming is the ascension of India onto the global economic scene, and how that shifts trade flows, shifts supply demand, prices, and geopolitical influence. Because India is on the border there with China. It's they're right there. China, Russia. They're right in there. So they will have a role to play the more economically strong they become. So,
right. And they've got Bollywood. You got to think about that too.
They have Bollywood, yes.
All right, so let's talk about one thing here. So if you're looking at the overall region where India is at, and you talk about them kind of backing away from exports. We see them do that a few times this year. The last couple of years, actually do some of that stuff. When you start looking at the amount of rice that they export, wheat they export, sugar they export, those kind of things right now, and they shut that off. You start looking at countries like the Southeast Asian countries, into Africa where rice is a big deal. Where's that coming from?
Well, the way these things work, if you get a demand side shock like this, it will take time for someone else to find a way to make up the difference, right? So if India's 10 to 12 million metric tons of sugar exports is no longer going to be available, someone else needs to produce that. Now, of course, no one else can produce that right now, but over time, given the right price, and the incentives and investment in countries who have the ability to produce more rice or sugar in the right environment, it will take time. Typically these things take approximately 10 years of high prices and investment and reallocating resources to get someone else to make up the difference of a major exporter no longer being able to do so. But it can be done. It will be done. But the market needs. But the reason you have commodity inflationary periods that last between 12 and 15 years is because that's how long it typically takes high prices and investment to eventually find new ways, new supplies to make up for the demand that the old system was not able to come up with. And then once we figure that out, then you have a bear market. Then you have a period of extended period of low prices, oversupply, as the market then kind of reassimilates into this newfound balance that they've created. Right now, we're only in year 3 of a typical 12 to 15 year commodity inflationary cycle. So we have a long way to go before we're going to find anyone replacing India's lost exports. And of course, if they become imports, you would have to add that on to what the world would need to create at a time where the volatility will continue to challenge production of just about everything throughout the world. So,
all right, one more quick topic here, and we'll shut it down here for this one. So you had the first grain cargo leave the Ukrainian port under the new deal. Since the grain deal ended, right? Your thoughts on that, Sean? What's that mean to the market, and does the market really care?
Well, the real key will be, is it just a few ships that were trapped in Ukraine that have been left to leave with cargo, or are they going to actually be able to get a shipping lane really going on a daily basis, like the grain deal had caused? Mm-hmm. Can they do that? Will Russia allow them to do that? The answer is we don't really know, other than they have been so far successful in getting some ships that were trapped in Ukraine to get out. Obviously, any movement of grain out of Ukraine provides extra supply. Doesn't mean the production in Ukraine is going to improve. It doesn't mean that the prices in Ukraine are attractive for growing production again. But on the margin, psychologically, the market feels that the ending of the grain deal, there's still somewhat of a stopcock valve that's been open that allows some grain to go out. It just keeps the bearish tone intact for now. It doesn't really necessarily make the market more bearish at current prices, but it certainly doesn't endear any reason for them to back off the pedal of being bearish. And it certainly doesn't bring any bullish buyers to want to take out offers and move the market higher if we're seeing some evidence that maybe Ukraine is able to get some grain out on their own without Russia being on board. Time will tell whether that's true or not. And all it will take is Russia bombing one of these ships coming out of the port and then it's cut off again. But for right now, the image of some grain leaving Ukraine keeps the bears steadfast in their view that there's no reason to get bullish wheat anytime soon.
Gotcha. Okay. All right, Sean, good stuff as usual. Folks want to reach out to you and get more information about what it is you're doing over at Hackett Financial. What's the best way to do that?
We have a Twitter page at FaradX11. We have our website at Hackett, Hackett advisors.com. We put out some interviews on there. Occasionally we make a few comments. Recently putting out a Twitter piece on drought in Russia, Ukraine during the planting stage here that could create one of the worst starts to the winter wheat crop there in quite a few years. And so we're not habitual posters, but we do try to provide enough information for people to stay informed with what we're doing, how we're doing it, to see if we could be of value to them.
Right on, Sean. I think you give them pretty good value based on the stuff you send me. I think everybody that wants to get that newsletter should take a hard look at what Sean's doing, because there's some stuff in there that I've never heard before, and I've heard it before with Sean, and I've heard it in other places. So his news is contrarian, and it's also seems to be the first to the trough there. So Sean, I can commend you on what you've been able to put together there on that newsletter.
I appreciate that, Casey. It's a lot of hard work. Don't get everything right, but do my best to try to get the big ideas mostly right, and so far so good. And hopefully, that can be maintained, because it's our mission to help farmers and producers and those in agriculture bring more money home, because it's a tough environment out there, and every dollar matters. So
yep, it absolutely does. And I can barely read, so Sean's doing a good job keeping it simple for guys like me to read it. So keep doing it, Sean. Keep banging, buddy.
Will do.
All right, I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast and check out the video version over on the YouTube channel, which is the Moving Iron Podcast YouTube channel. Go to LinkedIn at Moving Iron Podcast as well. Go to Moving Iron LLC to get everything Moving Iron related and see what's happening there. So with that, I'm Casey Seymour with Sean Hackett. Let's go some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving